'Tis the season for taxes, and if you're an M1 Finance user, you may be wondering if you owe taxes on your M1 Finance portfolio. So if you're unsure how to pay your taxes on your M1 Finance account, I'm gonna help walk you through everything you need to know. We're gonna break down how your stocks and dividends are taxed on M1 Finance, and we're also gonna discuss how to determine if you even owe taxes on your M1 Finance portfolio in the first place. Lastly, if you experienced any investment losses in the previous year on M1 Finance, I'm also gonna show you how you can use those losses as tax deductions to help offset your investment profits. Now, this video is not sponsored, but I do have referral links below for some of my recommended options of different online tax software for using with M1 Finance. I also have timestamps down below in case you want to jump ahead or jump back to any part of today's video. With that being said, let's get started. Let's first start off by breaking down what you won't owe taxes on M1 Finance. Firstly, no matter how much a stock or ETF you own increased in value, you won't owe taxes on that if you only bought it on M1 Finance, but you didn't sell. However, even if you didn't sell anything, you may still owe taxes on any dividends or interest you earned from your M1 Finance account. The second reason is if your investments are in a retirement account, such as an M1 Finance IRA, your taxes are actually deferred until retirement age. Alternatively, if your investments are in an M1 Finance Roth IRA, you will actually receive tax-free growth. Both of these accounts are tax advantage retirement accounts. With that out the way, let's now break down what will make you eligible for owing taxes on your M1 Finance portfolio. Now, as you know, nothing in life is free. And much like the income you earn from your job, the income you earn from your investments is also taxable in the United States. And whenever you sell an asset on M1 Finance, such as a stock or an ETF, a taxable event occurs because when you sell your asset for a profit, you experience what's called a capital gain. For example, let's assume you bought a share of Apple stock on M1 Finance for, let's say, $100, and you later sold that share of stock for $150. Well, you just experienced a capital gain of $50. Now, capital gains from investments can be categorized into two types. You have short-term capital gains and long-term capital gains. The good news is there are investment strategies that can be used to reduce your overall tax burden. Here are some of those strategies on how to reduce your taxes owed from both capital gains and dividends in your M1 Finance taxable investing account. And when it comes to capital gains and taxes, when holding your investments for over 1 year before selling, you are taxed at the long-term capital gains rate. But if you buy stocks in M1 Finance and you sell them within 1 year or under 365 days, your gains are then classified as short-term capital gains and they're taxed as ordinary income. This means your profits are taxed at your ordinary income tax rate. Yes, guys, this is the exact same tax rate that wages from your job are taxed at. However, if you buy and hold your M1 Finance investments for longer than 1 year or 365 days before selling them, your gains are then classified as long-term capital gains. Now, depending on your tax bracket, this could provide you with a tax savings of up to 20%. Even better, if you fall into the 10 to 15% tax bracket, your long-term capital gains tax rate could be 0%. Yes, that's right, guys. By holding a stock for at least 1 year before selling, you could potentially end up paying no taxes on your profits when you sell. If you want to see how the capital gains tax rate applies to your specific tax bracket, check out this capital gains tax rate chart right here for reference. Of course, guys, these are the current capital gains tax rates for this current tax year. You can always stay up to date with the latest tax rates on the IRS website. Next, I want to discuss dividends and taxes because if you earned any dividends from your M1 Finance portfolio, you also need to pay taxes on that dividend income, much like with capital gains. Because when it comes to the taxation of dividends, they are also split into two categories. You have ordinary dividends and qualified dividends. Now, ordinary dividends are taxed as ordinary income, meaning at your ordinary tax rate, again, based on your tax bracket. Qualified dividends, though, they are taxed at a much lower rate. Now, ordinary dividends, they are taxed between 10% to 37% based on your tax bracket. Again, this could vary by tax year. Qualified dividends, though, those are taxed at rates of 20%, 15%, or even 0%. Again, this also depends on your tax bracket. Now, if you'd like to see how the dividends tax rate applies to your specific tax bracket, check out this dividends tax rate chart right here for reference. Again, guys, these are the current dividend tax rates for this current tax year. You can always stay up to date with the latest tax rates on the IRS website. Now, in order for dividends to be qualified dividends, they do have to meet some specific criteria, mainly revolving around the holding period or how long you own the stocks for. Now, we're not going to get into the specifics of that in this video because it is a little more detailed. The main thing you have to know is you don't have to worry about this for filing your taxes, because when it comes to your tax document from M1 Finance, it'll let you know how many of your dividends were qualified, how many of them were ordinary, so you're essentially covered on that front. As you can see, you can experience significant tax savings on both capital gains and on dividends earned by simply holding your investments for at least 1 year before you sell. Again, guys, this is another advantage of investing for the long term. So when it comes to your M1 Finance account, whether you sold your stocks for a profit and you experienced a capital gain, or you simply earned a dividend from your stock holdings, in each scenario, you experienced a taxable event. But what if you experienced some investment losses on M1 Finance during the previous year? Well, my friends, you're in luck because you can actually use those losses as tax deductions to help offset your capital gains. For instance, if you lost money when selling an investment on M1 Finance, you can use capital losses and capital loss carryovers to your advantage. Together, these are two strategies that can help you earn back a good percentage of what you might have lost. Now, capital losses are the exact opposite of capital gains. Capital losses occur when you sell an investment for less than you paid. For example, let's assume you bought some shares of Apple stock on M1 Finance for $150 and you later sold those shares of stock for $100. Well, you just experienced a capital loss of $50. Fortunately for you, when you sell stocks or ETFs at a loss, your capital losses can be used as a way to help reduce the tax burden of both your current and your future capital gains. Because you can claim capital losses up to the full amount of any capital gains that you might have. Essentially, capital losses from bad investments can help offset your profitable investments. Also, beyond that, you can use up to $3,000 of additional capital losses to offset other sorts of ordinary income. Now, ordinary income is any type of income earned that is taxable at your ordinary tax rate, such as income from your salary and wages. Also, any remaining capital losses over that additional $3,000 limit are then classified as capital loss carryovers. This means you can then carry over those additional losses to the following tax years to offset future capital gains. There's also no limit on how many years you can carry over those capital losses. Together, guys, capital losses and capital loss carryovers act as a type of tax deduction for investors. They make it possible for investors to recover part of their losses on their tax returns by helping offset capital gains and other forms of ordinary income, potentially for years to come. So let's bring this all together now and explain how you actually pay your M1 Finance taxes, because you may be wondering, how are you supposed to keep track of all your capital gains, all your capital losses, and all your dividends in order to accurately pay your taxes, right? Not to worry, guys, M1 Finance completely takes care of all of this for you, because throughout the year, M1 Finance tracks all your buys, all your sells, and all your dividends, and then every year come tax season, they provide you with what's called a 1099 tax document. Now, generally speaking, the Form 1099 tax document calculates all your investment income, including capital gains, losses, dividends, and interest earned in the previous year. Your M1 Finance 1099 tax form sums up everything you need to know for filing your investment income along with your regular tax return. And when your tax documents are ready from M1 Finance, you should receive an email from them directly letting you know they're ready and available in the app to download. Now, if you're ready to retrieve your M1 Finance tax documents, you just have to follow a couple simple steps, which I'll help walk you through. So let's hop on over into the M1 Finance app. So once you're inside the M1 Finance app on the homepage dashboard, you simply want to click on your profile icon right up here in the top right corner. Once you click on that, you're then going to want to scroll down to where it says Documents right here. If you click on the Documents tab, you're then going to see your statements, your tax forms, and your trades. Simply click out of Statements so it just highlights it for tax forms, and here's where you'll find all your 1099 tax forms for both the current tax year as well as previous years that you were an M1 Finance user. Now, if you don't already see your M1 Finance 1099 tax document for the current tax year right here, it means that it's likely not yet available inside your app, so just keep an eye out for that email from M1 Finance. But again, when it's there, it's ready to download right here as a PDF form, and you're good to go. Now, there are multiple types of 1099 tax forms you may receive from M1 Finance, including one for capital gains, one for dividends, one for interest, and even one for miscellaneous income. But typically, M1 consolidates all these tax forms into a single form called a 1099 composite. Now, after downloading your 1099 tax forms from the app, they can then either be imported into your favorite online tax software, or they can be handed directly to your CPA or tax professional. A quick tip I have for you is if you're considering using online tax software, many of them today offer direct importing of your 1099 tax forms, where their software automatically imports all your capital gains, your losses, and all your dividends to really help automate the whole process for you. Now, for full disclaimer, I'm not a tax professional, nor am I providing you legal or tax advice. I just want to give you an overview of the key points you need to know about filing your M1 taxes. If you need tax advice, of course, always consult your CPA or your tax professional. Again, if you'd like to check out some of the recommended tax software for using with M1 Finance, I have referral links down below with discounts. Now, if you enjoyed this video breaking down M1 Finance and taxes, I definitely recommend watching this video right here, where I compare 5 of the top online tax software to consider using with M1. From free to paid options, you're sure to find one that works for you. So click on over and I'll see you in that video.